Good morning, my name is Cecilia. I'm from class the morning of accounting class of Economic Faculty, University of Panchabakti Pontianak. I'm here this morning to talk to you about an accounting issue that we feel is of great importance. The first topic, number 1, what is accounting? Accounting is the recording of financial transaction plus storing, sorting, retrieving, summarizing, and presenting the information in various reports and analysis. Accounting is also a profession consisting of individuals having the formal education to carry out these tasks. One part of accounting focus on presenting the information in the form of general purpose financial statement, balance sheet, income statement to people outside of the company. This external report must be prepared in accordance with generally accepted accounting principles, often referred to as GAAP or use GAAP. This part of accounting is referred to as financial accounting. Next topic, number 2. Explain the accounting equation and how it works. Equation accounting or accounting equation is an equation that describes the amount of asset recorded on the left is equal to the number of resource expenditure or will found on the right side. In general, property owned by a company said to be an asset or asset. If the asset is worth $1,000, then the source of expenditure must also be total $100. This asset will then show as a form of property owned by the company and the result on company that do business. Thus the source of the will of this expenditure depicting who financed such property at the time. Therefore, the asset must equal the source of will of shopping. Shopping source is defined into two, namely originating from the owner and of creditor, user loan. Shopping source coming from owner referred to as capital expenditure, while a source said to be derived from creditor or debt obligation. Next topic, number 3. What is asset? Asset, any item of economic value owned by an individual or corporation, especially that which could be converted to cash. Examples are cash, securities, account receivable, inventory, office equipment, real estate, a chart, and other property. Next topic, number 4. What is a liability? A liability is an obligation and is reported on company balance sheet. A common example of a liability is account payable. Account payable arises where a company purchases goods or services on credit from a supplier. When the company pays the supplier, the company account payable is reduced. Other common examples of liabilities include loans payable, bonds payable, interest payable, wages payable, and income taxes payable. Less common liabilities are customer deposit and deferred revenues. Deferred revenues come about when customers prepay a company for work to be done in a future accounting period. When the company performs the works, the liability will be reduced and the company will report the amount it earned as revenue its income statement. Next topic, number 6. What is owner equity? Owner equity is one of the three main components of a sole proprietorship balance sheet and accounting equation. Owner equity represents the owner investment in the business minus the owner draw or withdrawals from the business plus the net income, or minus the net loss since the business began. Mathematically, the amount of owner equity is the amount of asset minus the amount of liability. Since the amount must follow the cost principle and others, the amount of owner equity does not represent the current fair market value of the business. Number 6. Component of liabilities. Number 1, current liabilities. Number 2, long-term obligation. Number 3, other liabilities. Number 4, subordinated liabilities. Component of asset. Number 1, capital stock. Number 2, agio. Number 3, retained earning. Number 4, current year profit. Number 5, difference in revaluation of fixed assets. Next, component of equitas. Number 1, contribute capital. Number 2, retained earning. Number 3, unrealized capital adjustment. Next, number 7. What is balance sheet, and give the example of balance sheet. The definition balance sheet. The accounting balance sheet is one of the major financial statements used by accountants and business owners. The other major financial statements are the income statement, statement of cash flow, and statement of stockholders' equity. The balance sheet is also referred to as the statement of financial position. The balance sheet presents a company financial position at the end of a specific date. Some describe the balance sheet as a snapshot of the company's financial position at a point, a moment, or instant in time. For example, the amount report on a balance sheet date December. Example. This is example. Paul Guitar, December. Asset, current asset 32,800. Account receivable 300. Prepaid rent 1,000. Inventory 39,800. Total current asset 79,900,000. Liabilities. Current liabilities. Account payable 49,000. Account expense 450. Unit revenue 1,000. Total current liabilities 50,400. Long-term liabilities 90,000 for 500. Total current asset 17,39,000 9,000. Total liabilities 950,000. Owner equity 11,950. Common stock 9,000. Total owner equity 21,950. Total liabilities and owner equity 171,900. Long term asset lia short inform 100. Accumulate depreciation 200. Total long term asset 98,000. Total asset 171,900. So balance sheet, the all balance. The next topic, number 8. Income statement. The income statement is one of the major financial statements used by accountants and business owners. The other major financial statements are the balance sheet, statement of cash flow, and the statement of stockholders' equity. The income statement is sometimes referred to as the profit and loss statement, P&L, statement of operation, or statement of income. We will use income statement and profit and loss statement throughout this explanation. The income statement is important because it shows the profitability of a company during the time interval specified. It is hiding the period of time that the statement covers is chosen by the business and will vary. For example, income statement. This is example. Hunter Company income statement for the year ending December. Revenues. Sales. $5,000. Sales return and allowance 2,000. Total 700. Net sales cost of goods sold beginning inventory January 1 at purchase freight in less purchase discount, purchase return and allowance, net purchase goods available for sale, less ending inventory December, cost of goods sold, gross profit, selling expense, advertising, freight out, depreciation, utilities, salaries, general and administrative, salaries, depreciation, utilities, insurance, rent, Other loss and sale of land, interest expense, income before tax, income tax expense, net income, total $200. Part B. Part C. Number 1. What books are used by you in studying English for accounting? What do the books teach you? I have book learned is number 1. Carl S. Warren, James M. Reeve, Phillips, Office Accounting Carl S. Warren, Southwestern College, book 2004. 2. Framework Business Accounting 1. Number 2. What lesson have you got from studying English for accounting from Mr. Adi Mursalin, my English lecturer? Many lessons I learned from my English lecture. I understand the term many accounting terms in English sign English is a very useful to use when entering a company. Number 3. What is your opinion about Adi Mursalin, SAMM, your lecture of accounting English? I think my lecture is quite different from the others because my lecture is really explain clearly all the material present. Lecture fun as easily take a joke so that the classroom atmosphere become alive. As I bring my accounting English forum to class, I once again thank you for allowing me to be here this morning and hope that this activity has given you a much clearer understanding of how to only accounting equation in English. I will welcome the opportunity to return with another group of students to present a different accounting English forum topic in the near future. Thank you.